Nick, could you introduce us to your role at Partners Group and the private infrastructure offering?
Yeah, sure. So, Nick Kuys, I head up infrastructure for Partners Group here in Australia. I also have a broader remit, which is I cover the asset management for our infrastructure division across the whole of the APAC region. Been with the firm just over 6.5 years and been in infrastructure since the mid-noughties. In terms of Partners Group approach to infrastructure, I think where we differentiate ourselves is we are deeply thematic in the way we invest in it. So you won't see us responding to a sell-side sales teaser at all. We're really sitting down every sort of 6 months and saying, what are going to be the big sectors in 5 or 10 years? What do we have all the tailwinds, and how do we set ourselves up to invest in those now at a time and build platforms and build ecosystems in those subsectors ready for when the market catches up.
And what makes private infrastructure an attractive asset class for investors today?
Yeah, look, I think infrastructure as an asset class is really gaining momentum globally. Ironically, I think at a time when the previous access to the sector was mainly through the listed market, but that while it had access to infrastructure came with the volatility of the listed market, which is really decoupled from the underlying growth of the asset class itself, frustratingly so. Coupled with that, you've also seen a huge number of those listed names disappear off the board, so they've been taken private. And so private infrastructure now is a way to continue that access for private wealth advisors to get access to that subsector in a way that actually decorrelates or decouples itself from the vagaries and the volatility of the listed market.
And can you tell us about the evergreen structure and how that can help the end investor?
Yeah, look, I think, historically one of the things about infrastructure, because you're investing in hard assets, is that you would mainly access it through the institutional market into large-scale investments with a drawdown profile of cash that doesn't really suit the private wealth client, but also an illiquidity aspect. And so that, liquidity only came about when underlying investments were realized. I think what we've done with the evergreen structure is really try to solve for those key fundamentals. I think it's the trilemma of how do we give people access to infrastructure investment, and particularly now more increasingly value-add core plus infrastructure opportunities, but how do we allow them to deploy cash instantly and get money working for themselves? But more importantly, the evergreens come with a liquidity aspect to them, so that if underlying investors need that flexibility, it is there.
Does it differentiate investing for private wealth advisors and institutional?
Yeah, absolutely. I think the institutional investors are happy to manage that point around the capital calls and the liquidity piece themselves. Private wealth, I think, really need that combination of liquidity and access to the sector. The fact that you can give them through an evergreen global access to global infrastructure is again a differentiator. Look, at Partners Group, we've been doing evergreen structures now for a number of decades very successfully. We've predominantly done it for our private equity investment side of our business and done very well. We've had the global fund offering here in Australia that's been very successful for a number of years, and investors have been liked what they've seen there, and they've been looking for an infrastructure solution similar to that. The reality is we haven't had that capacity for a number of years because we've been waiting for a secondaries market to develop within the infrastructure sector. I'm pleased to say now that after having 10, 15 years of infrastructure globally, a secondaries market has really developed, and so you've got that perfect timing of a secondaries market that allows for liquidity and deployment instantaneously, combined with a tier one infrastructure investor to come together and help provide a solution.
And what's the most common question or misconception you get from advisors?
Look, I think the common question is infrastructure. I think that they're wanting to ask about the definition of infrastructure. I think what you've seen is a morphing and expanding of that definition, which they don't really understand. They know the age-old core infrastructure assets, toll roads, ports, airports, regulated utilities. The reality is that definition has expanded. We've got exciting new assets in the class, which include energy transition assets that we're having, data center and other digital assets. And while a lot of people look at that and say, that's core plus, and how do I understand the risk associated, ultimately, we always go back to what are the fundamentals of the business? What are the infrastructure characteristics that you can get comfort around the underlying cash flows that the business is flowing off? And so I think it's an education piece for the sector to say, yes, you can invest in core and get sort of, mid to high single-digit returns, but there's an opportunity here to really get alpha returns in infrastructure, still with really robust downside protections.
Nicholas, thank you.
Thank you for your time. Thanks, Drew.